Blank.
Hello everyone and welcome to the DashCast, where we go about trying to find the most interesting people in the world of cryptocurrencies, finance, and business. For the third episode of the DashCast, we were fortunate enough to have some time to sit down with Jimmy Song, a well-known entrepreneur, developer, and Bitcoin educator in the crypto space. Jimmy is a large proponent of understanding the basics of economics and applying that to the monetary theory behind Bitcoin and other cryptocurrencies. In this episode of the podcast, I not only get his opinion on the current state of Bitcoin, but also the ongoing debate of Bitcoin and Bitcoin Cash, as well as a variety of other topics that I believe he provides a ton of value for in regards to his insights and opinions. Our sponsor for this episode is Energy. Energy is a self-funding masternode cryptocurrency that's goal is to introduce and bring cryptocurrency to the masses. Energy intends to do this by significantly improving upon the self-funding governance concepts founded in projects like Dash and Smart Cash. Energy is already working and live with no ICO and no pre-mine, and has a strong decentralized treasury system with masternodes voting where to direct these funds. This allows Energy to pay developers and contributors, and as Energy grows, the treasury budget will grow, leading to a positive feedback loop. Energy is currently conducting an earn drop campaign which rewards users with up to 100 NRG coins for joining their community. For more information, check out the link down in the description. In 3, 2, 1. What is going on, everyone? Nicholas Merton here from the DashCast here on Data Dash, and today we are very fortunate to have the well-known Jimmy Song onto the podcast. Jimmy is well-known in the space. Thank you for coming on, my friend.
Oh, thank you for having me.
Awesome. So I want to go ahead and just kind of dive into a conversation today because there's a lot of interesting things that I've wanted to talk to Jimmy about for quite some time. And I've been following him for a while. He's been very active in regards to getting actual people behind Bitcoin development. It seems like for quite some time, it was a little bit of a niche group, but now we see a lot of courses coming out for developer work. So I'd love to hear what his work is in regards to that and how many people he's getting on board. But I got to start off, Jimmy, before we talk about anything serious. I saw on Twitter as not too long ago the giant 72-ounce steak that you recently ate, and I thought it would be a good icebreaker to start off on because I can tell you, as a meat lover myself, I always get meat lover's pizza. I've eaten briskets like the size of my thigh. I'm curious, how did you eat a 72-ounce steak?
Well, I mean, I love steak, and if that's like pretty much the only thing you're eating, you need to eat a lot of it. And this is something that you discover when you are, just like don't eat bread or anything sugary or even vegetables, really. So basically, the day before I didn't really eat, and the day after I didn't really eat. So I was just hungry enough, I think, where my stomach hadn't really shrunk yet, and I actually wanted to just try that meat. I wanted that much meat, and I was going to split it with my kids and stuff. So I was like, okay, well, the 72-ounce steak challenge, it should cost me $72, like it says on your website. And they said, no, $72 if you go up there and try it yourself. It's $200 if you want it at your table. So I said, well, okay, all right, I'll go on stage for $130 to try this steak. So I ended up doing it. I didn't eat any of the vegetables. I just ate just the steak, but it was delicious. And I don't know, I'm a big guy, I guess. I'm like 6'1", so there was plenty of room in there. I'm not that heavy though, but it ended up being all right.
No, I get you. I've had those days where I've gone for pretty much 24 hours without eating, and it definitely leaves room to be made up for. But I was curious, are you doing something, not to get too off topic from crypto and finance, are you doing like something like a carnivore diet? Like for example, I did keto for 3 months back, I think about a year ago in the last summer actually, and I've actually started to get back on the swing of it because I miss the energy I used to have when I was just like very sharp-headed when I was doing keto.
Yeah. So I've been doing paleo for about 5 years. I did keto for a little bit, but yeah, I'm definitely more into carnivory right now. And I do a lot of intermittent and long-term fasting as well.
Cool.
So between all of those things, it's fairly easy to function, and you do have that mental clarity and sharpness and everything else. So yeah, it is all related.
All right, before we get into being like a diet advisors for the YouTube audience, I definitely want to talk to you because I think out of a lot of people in the space right now, there's obviously a lot of well-known figures who've either made their fortunes in crypto or are well-known speculators or maybe creators of projects. I really like you, Jimmy, because of the fact that you're really focused on monetary policy. You're focused on kind of the traditional system of fiat currencies, the inefficiencies and centralization, and really trying to decentralize money, which is something that I'm really passionate about personally as well. So I want to ask you, what are you generally looking forward to in this space? You've done a lot of work with getting people on the train of developing for Bitcoin and cryptocurrencies. And I obviously know you have a big harsh opinion on altcoins and ICOs. And I can agree with you on a lot of it. I've learned more and more about ICOs. And the more you learn about the space, it's just like, that's disturbing. But anyways, love to hear what's kind of catching your eye right now in regards to what's going on in crypto at the moment.
Well, the more I study money, and this is something I tweeted not too far back, the more I study money, the more I'm realizing, oh my gosh, this is going to be like a giant changeover. And it's like at a scale that people are not expecting at all. And it's going to be a giant change in the entire world. And I don't think people realize this is coming. And this is, along with something like the demographic time bomb that we're all about to experience in like 20 or 30 years, I don't think people have thought about what's going to happen with this stuff. And the more I study money, I'm like, wow, this is like the first one that's actually going to be really like hard. Like even when we were on the gold standard, when all the way back in Rome, when they were issuing currency with silver and stuff like that, every sovereign has more or less, debased their currency, right? Like they shaved a little bit off, and then
a little less silver.
Yeah, a little less silver. Every prince did this. Every single centralized power has done this to money. Bitcoin's the first one where you can't do it. Like you really, literally can't do it, and that's gigantic, dude. Yeah. And it's when you have real fairness in money, which we haven't had pretty much ever, that's going to change things in ways that I don't think anybody can really predict like that well. I mean, you can try to anticipate it and stuff, and I think those are the people that will end up the best off. But oh my goodness, I mean, there are all these rent-seeking jobs that are going to go away. I mean, in a generation or two, you're talking about entire governments, being drained of all of their, purchasing power. And I mean, it's going to be big, and I don't think people really realize what that means.
No, Jimmy, I 100% agree with you. The thing that I keep going back towards, and I try to tell the people when it comes to cryptocurrencies, so many people are kind of shied away by the idea of a digital currency. Well, the first off, the big point that we have to accept is that we use digital currencies on a day-to-day basis when we use Visa or MasterCard, where we just have money in our bank accounts. And I think it's around 98% of all money is digital in the world right now, so that's pretty fascinating. But the big thing that you're exactly right on that, Bitcoin can't be manipulated. It can't be, in a sense, for example, when people debase silver or gold coins by mixing it with other minerals, or for example, they would simply remove the gold standard, having something pegged to the currency. Bitcoin itself is the first currency on a digital scale that allows us to, in a decentralized manner, in a trustless manner, actually follow the code. We know the code is sound. You can't, dilute Bitcoin in any way. You're not going to be able to just simply double the supply of Bitcoin or print it out of thin air. And I think the value of that, especially in the limited quantity that it has, is so powerful. And for example, I know a few people in the financial world who really understand Bitcoin and blockchain. It's really a small segment. I'd say it's probably around 1% to 2% of people in the banking sector. And the people who really do understand it, they're scared out of their minds. They have no idea how they're going to compete with it. They've tried to patent the hell out of blockchain applications, but I mean, you see no serious solution, because eventually in countries like Venezuela, and I think in Turkey and Iran and all these countries that are going through very serious crisis in regards to their government or mismanagement of monetary policy, they're going to go for the alternative. They're going to learn that it's valuable.
Yeah, and there's a lot of rent seekers out there that
Hmm.
are going to lose their jobs. That
Yeah.
and that's a very good thing in many ways because, I mean, there's let's face it, like half the economy right now is probably rent seekers. But I mean, you take those out, there's a lot more productive capacity and like value flows to the people that are actually adding value. It adds self sovereignty. It allows people to like create goods and services, and that instead of rent seeking, instead of like princes diluting money and spending all that effort doing that,
Hmm.
you can have them actually do something useful. I think that's a really big and important thing. And as we like, it's a generational shift, guys. This the more you study this stuff and the more you understand the consequences, oh my goodness, this is yeah, I mean, we're on the cusp of something.
Well, going
Yeah.
into, studying it, the one thing I always try to point out, I'm actually going to try to do a
Mhm.
book video soon. I have a lot of books that I've read that I really enjoyed. I'd love to hear what you've read, Jimmy, because I'm always looking to add to my book collection and stuff. What are some of the things, maybe even not even just books, like books or
Mhm.
documentaries, that you turn
Mhm.
to learn about this stuff? Because I think monetary policy is something you should understand if you're going to really be active in crypto.
Yeah, so Mises.org has a bunch of free books that you can go and get. It's all Austrian economics stuff. Lots of really good information in there. I would recommend Economics in One Lesson. I think that's Henry Hazlitt, I think it was. And if you want to dig deeper, there's plenty more on that site. One that I read recently that was really good was The Ethics of Money Production,
Hmm.
and that's looking at the moral aspect of money and what like how much um, centralized power over money has been abused even on their hard money system.
Hmm.
Like sovereigns will dilute the money, and there's no real ethical justification for that. As much as people like to try, there's really nothing that you can say to justify taking money away from one group of people and spending it yourself. It's a form of taxation that is not obvious to the populace, and that's the only reason they get away with it in any sense.
I think
So
it was most religious texts, if I remember correctly, actually
mhm.
advocate against interest-based currency, like interest over the currency itself. And
Yeah.
there's stuff like this historically that's been written about this topic
Hmm.
of mismanagement of monetary policy, trust in centralized parties. So yeah,
Hmm.
it's again people. I think people when, for example, if you compare, for example, I think it was the Frankfurt, the currency in Germany that pretty much hyperinflated. If you compare that to the dollar and really think about it, they don't have much differences. It's just simply a different name and a
Hmm.
different mismanagement of monetary policy. It's the same exact technology. It hasn't evolved. So I think in that sense, we're going to realize, like you said, building systems of hard money, actually having a system that isn't trusted, and the value behind that, just being able to know of a steady rate of currency, whether it's deflationary or set to a specific rate of inflation over time, at least knowing that and making sure that no one's just going to step in and change it one day. I mean, that's fascinating to me.
Well, it's the whole moral hazard of being a centralized controller of the money, and this is something that nobody can really resist.
Hmm.
That's the thing. Every single time that somebody's had central control of money, they haven't been able to resist making themselves more wealthy, rent seeking out of it.
Hmm.
And this is why I'm so opposed to so many altcoins and ICOs. They're all centralized,
Hmm.
and like they're like, and everyone's like, well, they're not gonna do that. That would ruin them, or like, whatever. Like they make all these spurious arguments about how the character of the people that are actually issuing these things are, is good enough that you can sort of trust them.
Hmm.
That's not really any different than trusting in any particular government. It's not about the character of the specific people. You it's the fact that they control the power itself. That's bad.
Yeah.
You want to decentralize as much as possible. The problem isn't the specific person in power. The problem is that the power is concentrated on its own, and that's the real thing that you have to fight against. Is you want to take that power and give everyone self sovereignty instead of having one sovereign, entity that gets to decide everything. That's the real evil here, and that's what pretty much every altcoin and ICO has gone towards, is centralized power, but trust us, we're going to be good. And there's no guarantee of that. Nobody in history has been able to resist that temptation of abusing centralized power, especially if they can get away with it and make themselves wealthy. And most of them already have, right? Like they sold their ICO token, kept back a lot of it, and they're making themselves wealthy. So I see this as a moral hazard of like epic proportions that really nobody can really resist. As they say, power corrupts and absolute power corrupts absolutely. This is very much in the absolute power realm. So yeah, I really like Bitcoin's the only one that really makes sense in that regard.
Yeah, no, I mean, yeah, trust me, you don't have to get me to rant on about ICOs and stuff. We've actually talked a little bit on the channel. I've been trying to tell people what I've learned about over the past few months in regards to the cooperation of hedge funds and exchanges and venture capital and the ICOs that are launching. And what I find is that the few actual innocent players are actually more along the lines of some of the founders of the ICOs. Many of them are going along with the process, but they don't know what it's like, what to expect when they launch an ICO. They just kind of step in with their ideal dream. And then you have all the pools and the hedge funds and the VCs and the exchanges who show that you have to play their game if you want to make your ICO successful. And it's really sad. It's taken away from this potential value of what an ICO could bring. It used to be this idea where 50,000 people can invest in something. Now it's a select few accredited investors. They get all the connections to the exchanges. They prop it up with market makers and then let's hope that the retail investors will buy it and take it off our hands and let's make a quick buck. Like that's,
what you essentially are describing is a governance takeover. You start with somebody that looks legit or trustworthy, but then it goes towards people that aren't, and that's kind of what happens. And that's, again, the problem isn't the people in charge, right? Like, oh, if only we got rid of, so-and-so, everything would be okay. That's not the problem. We've seen this in U.S. politics over and over again. It isn't about the person in charge. It's the fact that they have that much power, period. It's the centralized power that is bad. And decentralizing that's the key. And Bitcoin, as far as I can tell, is the only one that does.
Yeah, I know. In regards to Bitcoin, I want to ask you, because we can talk a little bit about Bitcoin versus Bitcoin Cash later, and we'll keep pretty mild on that. I think we all know you're pretty much a big Bitcoin supporter. I'm pretty much on the same page for the most part. But I'm curious to ask you, Jimmy, what is exciting you most about Bitcoin's current development? There's a lot of things in the works. I obviously understand a lot of people are looking towards adding privacy features to Bitcoin. A lot of people are looking towards scaling solutions. I think things like, for example, like Schnorr signatures. I'm curious to see, as a developer in the space or someone who's teaching others to develop, what's exciting you at the moment?
Yeah, Lightning is very exciting. I think a lot of the security features around Schnorr are very exciting. Bellora Naven and Musig in particular will give you a lot more privacy. And, Graftroot, Taproot, all of that stuff. The thing, though, that I want to make sure that we're careful of is that there is a tendency towards neomania in the cryptocurrency space. People always are sort of only looking towards what's newer. The thing that's working is the vast majority use case. And the thing that's working for Bitcoin right now is that it is a great store of value. There's been nothing before that was both decentralized and digital. Like actual digital scarcity is the real innovation. And everything else after that is just trying to add like little fluffy things on top and making it sound like it's something actually really interesting. Oftentimes they're detracting from the decentralization or the actual scarcity or and trying to add all these things that people and markets have more or less said we don't really need or want, but that's their sort of value prop. I'm not so sure that Bitcoin needs that much more innovation per se. It needs more security. It needs more durability. It needs more assurances that it will continue to stay scarce for a very long time. That's what gives Bitcoin its value, and not necessarily, oh, there's this new feature. I mean, maybe Lightning eventually ends up becoming a very, very good way to do method of payment and things like that, and I'm all for that. But but let's not forget what the only thing that's actually worked in the cryptocurrency space is Bitcoin as store of value. Yeah. Nothing else has any use whatsoever or any traction. I mean, maybe Bitcoin as method of payment just a tiny bit in very select things like darknet markets or foreign remittances. But the things that work, that's, I mean, like I'm a startup veteran, right? I've been doing this a long time. You can have lots of new ideas and you can say you're going to do X, Y, or Z and get people excited or whatever. But the things that actually drive your company, that pay the bills and stuff, are things that the markets actually said they wanted. And the money that you pour into that will almost always get you a good return. Money you pour into like some of these other projects that you think the market might want, oftentimes they're wasted. That's not to say you don't do them, but the things that you should be excited about are the things that are working. And oftentimes we focus a little too much on the stuff that doesn't necessarily work or isn't as in as much demand by the market and so on.
Yeah, no, I completely agree. And I think a lot of people, they see Bitcoin and they would ask you, Jimmy, they're like kind of like the idea of like, well, you're saying there's a store of value, right? It's like, but Bitcoin was at 20,000 back in December. And the thing I always try to tell people is that a store of value doesn't mean that it lacks volatility. A store of value is simply, I enter into something at a set price, and for the mass majority of its history, I can get that same value out if I swap it. And that's the whole thing, is that, for example, we can look at precious metals markets. Even in the past 100 years, even though gold has been used for thousands of years, that in the past 100 years, we've had spikes where silver has gone from $2 to $40, and gold has had parabolic run-ups of the same magnitude. It's very common to find stores of value test certain levels. They get hype behind them. There's excitement. Sometimes there's fear or pandemonium in other markets. And then you make sure to see, wait a minute, can we hold this level? And people don't realize we've been holding 6,000 practically for the past few months. Like, that's literally where we were back in October and November of last year. So yeah, you're absolutely right. I think the store of value has really been the real use case here because it removes trust.
Yeah, and a lot of people focus on the volatility because they want it to be a steady growth against the dollar. But that's not going to happen. It's a new asset class. And when they're not pegged together, that's what happens. You get some volatility. And it's more a feature, not a bug. It wouldn't go, if it were just steady, then it'd be like Tether. It would just like stay at $1 the whole time. Yep. What you want, you want it to be volatile, so it goes up a lot more than it goes down, but you're going to have some downtimes too. It's kind of like people want everything, right? Like they want something that will guarantee that they will make money no matter when they get it out. You can't have everything. There are trade-offs, and one of the trade-offs is that you get local volatility, but long-term, uptrend in price as a result. And that's not something that like any asset class will give you. I mean, you can maybe get that out of bonds, but if you subtract inflation and stuff like that, you end up losing money, and that's not a very good store of value either.
Jimmy, you forgot one thing. People want quick returns. Bonds won't give you that.
But if you're in it for the short term, I have no sympathy for you. Like you go and gamble, might as well hit the blackjack table after learning how to count cards. I mean, that'll probably get you a better return.
Yeah. No, I agree. I think that's the thing. I've definitely been set for the long term. I think if anyone, once again, going back to that point of understanding monetary policy, once you understand how the game works, which, I mean, again, how big it really is astonishing in this world, how big the financial system, interacts with our day-to-day lives. And the flaws in that fiat currency, when that switches and when we go to a world of cryptocurrency, the possibilities will seem endless. I'm really excited for it. But, talking about this point also, going back to what you're talking about earlier, I really like that you focus on centralization. I have a belief in some ways that there are some institutions and things in this world that operate good on centralization, and there's some things that operate very bad on centralization. And that is, for example, great use case is money. I think money needs to be decentralized. But, there's been a lot of things that have really kind of hit my mind recently as I've been trying to take a bigger macro trend picture. Apple recently hit $1 trillion valuation. Amazon just recently, I think today, just hit $1 trillion valuation. Do you see that in the corporate world we're going to see maybe some distribution? You know, there's a lot of scams going on in the ICO space, right? And we have been really hard pressed to find any value in the ICO space. It's really hard speculation at the moment. Do you feel that there's going to be like enterprise adoption of cryptocurrencies, and with that, distribution and decentralization of a lot of industries across the world?
Well, so let me say this first. I don't view like Apple and Amazon's valuation as really that legit per se. A lot of that is driven by fiat money, and they have early, because of their size, they get early access to basically fiat money that gets printed. And that's it's really kind of sad, but that's why corporations tend to be gigantic, is because when you reach a certain size, you have enough purchasing power to be able to get loans that are essentially free, and you can do whatever, and like you don't need to be that efficient. You can be tiny bit efficient as a giant company, whereas if you're a small company, you have to be massively more efficient in order to compete with these guys. So the scales are tipped towards giant companies, and on top of that, the stock market in particular. A lot of people try to store value, and they know that if they keep it in dollars, that they're not going to be able to store value very well because of inflation, which is horribly underreported, by the way. The CPI says like 1 or 2%. The actual money supply increase is like 7 or 8% every year. So yeah, like everyone's like sort of living in this fantasy that we're on 1 or 2% inflation. Totally not the case. But regardless, all of that causes people to go towards stock markets and stocks and things that store value. This causes people to think way more about money than they used to. For example, this is one of the things that I got out of that book, The Ethics of Money Production, is that back in the 1800s when we were on the gold standard, people just kept it in gold, right? Like that was it. That's all they did, and they didn't think that much about money. If they save some, just put it in gold. It'll store value very well. You don't need to think about that. With the advent of fiat money, what's happened is that you now have like financial planners and foreign exchange markets and all this other stuff that's sort of rent-seeking around the fact that it's not really really sound money. And people have to think a lot more about money just because there's no good store value. So they have to invest in real estate, diversify their portfolio, and have like 90 different investments and stuff like that. And that in turn like makes them think about money way, way more than they actually should be, right? Like they don't need to be thinking. If you have sound money, you can actually take your mind largely off of the actual investments and things like that. Instead, you have like all of these rich people that are just obsessed with money because they have to be. Otherwise, their wealth gets taken away from them, and it's kind of a really horrible way to live life when you're like constantly in fear of your money being taken away. But that's more or less what people have done. So that also inflates a lot of the stock market, the market capitalizations of these large companies, because they're seen as a lot better bets than the U.S. dollar. Yeah. But anyway, the question that you posed for me was about how enterprises and how they will adopt Bitcoin and things like that. I think eventually they will. I'm not sure if it'll be these big companies per se. A lot of the big companies are, again, complicit in the entire fiat money system. They get more or less 0% loans, and then they only need to like make 1 or 2%. They could do that by issuing bonds on the market, or they can do that by like just being even a little bit efficient in the actual production of their goods. They don't need to make that much profit in order to make all of that work. So there is that aspect. So I don't know if the big companies will be after it, but a lot of the smaller ones I can see going forward sort of taking over. So for example, there right now in the economy, there's this massive gap. You're either more or less a contractor working on your own, or you're a giant company that's well over $1 billion in market cap. And there's a lot of room in between that doesn't really there aren't that many companies that are filling that niche. And they a lot of VCs call them like lifestyle businesses or whatever. But there's a lot of room in between, right? Like goods and services for people that aren't like unicorn level, that isn't like needed by everyone. But a lot of those businesses, I think, as a competitive edge, they're going to start taking or demanding Bitcoin for their services, just because first of all, there aren't that many goods and services in that region. So if you are somebody in Bitcoin and you want to provide services to Bitcoin holders, you're probably gonna demand Bitcoin. So I mean that's pretty obvious. I do that for my seminar. I demand Bitcoin if you want to attend my seminar, and that's because I believe in Bitcoin as a store of value. But that'll start expanding out, right? Like there will be other services and goods and services that people will figure out that's in this giant gap, and accepting Bitcoin will become their competitive edge because they don't need to make quite as much money versus fiat, because they can save it and they can grow their business faster and all this other stuff. And then as these companies grow, then I think you'll see some of the enterprises. But yeah, I mean, like the current group of people, they group of companies that do all this stuff, I think they're much like the government system and everything else. Like I said at the beginning of the show, like a lot of the people, a lot of the institutions that are around right now, they're going to get some serious disruption with the changeover in money, because I don't think people realize just how much stuff is propped up by fiat money. And and you take a lot of that away, and a lot of these companies that are complicit in that, the governments that are complicit in this, I mean, they start going away, and then like other stuff starts taking over. This is a generational change, and some of them are going to try to imitate and all that stuff, but it's not going to be easy to survive this thing, because a lot of the advantages that the big companies have, like they don't necessarily last. And if anything, a lot of big things tend to be horribly inefficient, and every management consultant knows this, right? Like you could cut out half the employees in a giant corporation and nothing would change. Like you would still make the same amount of revenue. Like there's a bunch of rent seekers and leechers. The reason that they're allowed to be that inefficient is because they have early access to newly printed money, and there's a large aspect of like government support that they're getting out of that. So yeah, I mean, so much is going to change, but I see it playing out as starting in Bitcoin, but like sort of spreading out to the broader economy as people find these like niches of like companies that are maybe 150 people, something like that will just eat the lunches of these big corporations, because they're much more efficient, much more profitable, have a sounder money, can save much more better for the long term, and are much more anti-fragile, because they'll have learned lessons from other companies that are similar. So that's how I see the future going forward.
Yeah. Before I get into my big point, I think you made a lot of good points in the whole kind of rant there on all those different things. The one thing that I wanted to bring up that was quite funny, I worked out in Silicon Valley for a while at a startup, and we were very hard driven. Like everyone was awesome there. Everyone kept working. And the one thing that was so funny, I was like, when I got to Silicon Valley, I wanted to go see it around, see around and visit some of the places. And I thought, man, I'd love to go see the Google headquarters. Like we were just down the road from them a few blocks. And my CEO was like, oh, Nick, you don't really want to go see it, because we went, and it's like the campus there is cool. But the thing about it is that they have something called ice cream hour, where like it's like a mandatory hour you can't work, from what I understand, like, and you have to take a break. And it's exactly like the rent seeker mentality that you're talking about. It's completely opposite of what Google used to be.
Yeah, I mean, it's a centralized, paternalistic, top-down thing, and you get more of that behavior the larger you become. And there's I forget what that number is called, Dunbar's number, I think, where like you can't know more people than like 150.
Yeah.
Like you just can't operate that way. Everything changes right around then, where you get a lot more bureaucracy. You get an HR department. You get, like people that you like. There's nobody that knows like what a particular person does, because it just gets too inefficient. And when you're the size of Google, there's tons of those people in your company, right? Like,
Yeah.
and you have no idea whether, and they try to weed it out, but there's people are clever. They figure out how to rent seek more and more cleverly. And it becomes this thing where you have these giant bureaucracies, and like people are able to survive in them and figure out adaptive strategies. Like they used to have like 360-degree reviews and stuff at Google, right? Make sure that your not only your manager evaluates you, but your peers evaluate you, and if you manage other people, then those people evaluate you and everything else. Well, some people at Google figured out how to game that system, right? They go around, and then they like make cartels of good reviewing things, and then they could all be sort of like lazy together. Like there are adaptive strategies to any sort of centralized rule that you can make, and it's you actually have to know people in order to figure out if they're doing the work or not. And this sort of starts breaking down at around 150 people. So that's why I give that number. I think corporations or groups or any sort of large scale thing like starts breaking down around then, and that's not like a large size. The size of these giant companies is completely unnatural. That's not that's antithetical to how people work, and it introduces all sorts of inefficiencies. And the only reason that they stay that bloated is because of the current system that we're in.
Yeah. Speaking of that current system, and I think you were hitting it pretty much on the nail on the head in regards to how stock markets work. I actually just put out like a tweet rant of all like the big macro trends that I'm spotting at the moment. And the one thing I just keep getting caught up on is right now we have a record amount of stock buybacks. And to put that in simple terms for those who don't know, it's pretty much companies either using the cash on the balance sheet or going out and borrowing money at cut rate interest rates from banks, 1 or 2%, really depends on the rate at the moment of the country. But going out, being able to borrow that money and literally prop up their own stock. So we have this period where there's record stock buybacks and record institutional selling. And institutional selling is when people at these companies are selling shares. So why is it that even as these things are rallying to new highs and we're getting sold on these stocks, and I can tell you I've seen more and more TV advertisements to register for an E-Trade account or register for some kind of brokerage platform to start investing, at that same time institutions, the actual people working at these companies, are selling as they continue to buy back their own shares on the company balance sheet. Yeah, so I mean it's almost like a gigantic Ponzi scheme at this case, because it doesn't have anything to do with real economic indexes. GDP doesn't have to go up, sales don't have to go up, but if we can keep buying our own shares, keeps the punch bowl full and keeps the party going.
Well, it's a way for you to be able to make the number of your shares more scarce, right?
Yep.
Like that's what they're doing with the newly printed money. It's hilarious. It's I mean the entire edifice of central banking and how they buy treasuries with newly printed money. It's really issuing debt and all that stuff. It's a lot like that in the sense that it's a second order thing, and there's a level of indirection there so that people don't know what's actually happening. But what that amounts to is government printing money to prop up asset prices. Yeah, what does that sound like? Well, it sounds a lot like the housing crisis. So it's kind of crazy, but that's it's a form of quantitative easing, I suppose. I don't know.
No, it is. I mean, again, it's bringing money out of anywhere and pretty much just propping up assets without any fundamental value. No, but I think to your point earlier about the shift that's going to come as well, I absolutely agree. I think what's going to be really amazing is for the first time, I think, on an international scale, America, where I live currently, I don't know where you're based, Jimmy. Where are you based at?
Austin, Texas.
Austin, Texas, cool, awesome. Yeah, no, I mean, the thing that I keep coming back to is America has generally been the hub of innovation on the global stage. Like, we've kind of been the front runners in Silicon Valley and in the automotive industry and a lot of different areas. But I think for the first time, we're not going to be, and at least generally in the Western part of the world, the first adopters of the next big revolution, which is crypto. I think we're going to see it mostly in Eastern Asia as well as in mostly African and South American nations. And the reason I say that is because, again, it goes back to what we're seeing right now in the emerging markets. We're seeing real actual use case. Like, I was reading an article on Cointelegraph, and they had a really nice review of Venezuela, talking about how there's actual organizations there for Bitcoin and Dash, and they're actually going out handing people $10 Dash paper wallets and just showing them how to use crypto. And there's actual retailers who want to take it. They prefer it over, the Venezuelan bolivar because, and the thing that people don't factor in is that not only are consumer prices going up, but the cost to produce goods goes up when these currencies hyperinflate. So I think, again, it's the smaller businesses that are doing this, and it's going to be a big power shift because they'll have, like you said, sound money, and they'll also they'll accept the currency that brings in the clientele. And it'll get to a point where the bigger companies need to do that when enough people lose trust in traditional currency.
Well, it's when the bigger companies want it because they're going to be like, oh man, we can't compete against this unless we go and get it. But yeah, it's clearly happening somewhat. Like it's a lot easier for somebody that's already gone through at least a few hyperinflations. So people in South America, they get it, right? Like they get it right away, and a lot of them own a lot of Bitcoin and so on because they go, oh, okay. Well, if I keep it in this, then I don't have to worry about the government inflating my money away. I mean, like some of them have gone through it like 4 times in their lifetime, which is like crazy. We in the United States haven't gone through it even once.
I've never experienced it.
Yeah, like we haven't experienced that, and part of that is because the U.S. dollar, for historical reasons, has ended up the reserve currency of every other central bank. So there's always kind of sort of a constant demand for it. So we'll probably be the last ones to experience hyperinflation with respect to Bitcoin. But it'll happen, right? Like people like having a reserve currency that's got something solid behind it, and essentially, if you're your own bank, then you're good, right? Like you just go get some of it. It'll be, oh man, just the geopolitical ramifications of everything. It's insane.
I pretty much I put out on a tweet recently like that a lot of these countries in the emerging markets, for example, you were listing like in South America and everything, like Argentina. Argentina's kind of caught in like a catch-22. Right now they've been participating with the IMF and taking like a low interest bailouts pretty much, and then obviously you have structural readjustments, which is what the IMF pushes every time they give you money. So you're either going to continue down that same path that's inevitably going to lead to your currency still hyperinflating and an unstable economy and most likely a recession, or you have to give up power and allow cryptocurrencies to flourish, like to have something that's actually going to let people escape out of that traditional system to have a store of value. And I think it's a beautiful thing. The technology will speak for itself, and it will take over that traditional system of money naturally and organically over time.
Yeah, it's going to be pretty crazy, I think. Yeah. Oh, I'm just along for the ride at the moment, and I'm trying to plan accordingly, and trying to figure out how to make everything work.
Well, cool. I want to actually ask you as well, just to kind of on the last few topics here. We were talking about altcoins and everything. I know generally because I spoke. I don't know if Tone remembers this. We spoke on a panel back in I think February in Singapore. And I obviously know Tone is like an absolute maximalist, and I know you're kind of down the same alley. What do you think about some of the top projects out there? And I'll list a few that have been on my mind recently. There's projects like Ethereum, obviously. People either usually love or hate Ethereum. There's also projects like Monero, for example, and then also one that I've really been into, and if you don't know about it much, NANO is one that I've been really looking into. So what are your thoughts on some of those projects?
I think they're all more or less centralized. So I don't really rate them. Yeah, like I said, there's a moral hazard when you have centralized power. And anytime you can hard fork, that means that you have centralized power. If you can force everyone to upgrade in order to stay on your currency, you are that centralized power. And anytime you hard fork, anything goes, right? Like you can reset the ledger. Ethereum's done this before, right?
Yeah,
Like
they roll back the chain. Yeah. Hmm.
yeah. Well, I mean, like they can make the ledger whatever they want, and a lot of these tokens that have come up, they start the ledger with we own 50% of all of the ones outstanding and things like that. So, to me, like all of these centralized things aren't worth or aren't very good like long term, because they're really fiat money. They're centrally controlled. They're governed by somebody. So for me, those I don't rate them at all. I think they are not worth investing in for the long term. But that said, I mean, if I look at like actual technical at the technical merits of some of these, I would say like Monero, Zcash, and Decred actually have the most interesting technology. But again, they're still all centralized to a degree. So. But I have a lot of respect for them, and I'm an advisor to Decred, like because I respect them so much. But ultimately, the thing that makes Bitcoin is the fact that there is nobody in control, and there is nobody that's having to navigate that moral hazard, which very few people throughout history have ever managed to navigate around, because that temptation is really, really strong.
Yeah, no. To that point, I absolutely know about Ethereum. It's the reason why I'm quite concerned about Ethereum in the long term, and I don't really see much value actually being extracted out of just launching tokens on top of it. But outside of that, I mean, for Monero, is there centralized aspect to some of the other altcoins in the space, like for privacy coins, especially if they hadn't gone to like an ICO? Because Monero's mined, it has.
Yeah. I'd say they're one of the least bad ones, but like even if it were decentralized, I would still prefer Bitcoin over Monero. And the reason is because you can see the amounts on the Bitcoin blockchain. You can't on the Monero blockchain. And part of the trust that you have to have, the most important thing is that scarcity. And if that scarcity can be compromised in any way, oh man, that's like that to me, like it is the like would be a huge cause for concern. And we know, for example, that Monero had that like point addition bug with ed 25519, and it was possible for a time to be able to create a new transaction or like create money out of thin air using that math. And Monero's on CryptoNote, Bitcoin was on CryptoNote, so somebody managed to print a bunch of money on Bitcoin. And that's like you mess with scarcity in any way, or the possibility that you can mess with scarcity in any way, that makes me less secure about that actual coin, because obviously if somebody finds a mathematical exploit of ed 25519 or like ring signatures or bulletproofs or whatever it is that they're using right now, and all good technologies, by the way.
Yeah.
If they can find it and they can like slowly seep in and more or less debase the currency on their own, then it's not a very good currency. Like it gives you maybe a little more privacy and convenience in that regard, but the more important thing to me is the absolute scarcity of it. And that's something that Bitcoin will always have, because the amounts are in the clear, and that you don't have to trust that the math isn't exploited yet.
So I'm going to put it into small term: security of scarcity. There you go. There you go. I like that. Yeah, I mean, I agree. I've been much more. So, for example, like going towards something that I think is an inevitable conversation. It's probably a good one to end off on. Is Bitcoin and Bitcoin Cash. If someone like myself, for example, I'm actually quite comfortable, and I'd like to hear your comments on this, Jimmy. I know some people are very hesitant of this, and some people are more open to it. I would honestly be fine with, for example, when we talk about block size, I think an increase to 2 to 4 MB. I'm not too concerned that that would, say, centralize the network. But even considering that, even considering block size, I would much rather see us do exactly what we did with SegWit and only raise block size if we get, for example, another December type event where fees are $40. I would much rather see what we can do with Snore signatures, where we can shrink down what we use in regards to one block, and then we can talk about increasing block size. That's always been my kind of middle ground approach. For example, if it wasn't written by corporations and a few select people in a New York agreement, I would have loved SegWit 2x. That would have been the Bitcoin that I would like, where it's a doubling in block size with SegWit. That would have fixed a lot of issues, and we would have never had the craze and fees that we had in December. But at the same time, we would allow SegWit to get adopted to where it is today. So what do you think, about increasing block size slightly, and then also what would be your approach to scaling Bitcoin on-chain, excluding Lightning Network?
Well, first of all, I completely disagree on the SegWit 2x because that was a hard fork. The minute you have a hard fork, that's centralized. You are forcing everyone to upgrade, and someone is saying you have to upgrade. That someone is the centralized party. It was a governance takeover attempt. And I'm completely opposed to that. I'm all about self-sovereignty. That's what Bitcoin stands for. You are master of your own node. No one can make you do anything with it. Okay, you can run stuff from before BIP 16 and still have it run everything on the network. No one's forced you to use pay to script hash. No one's forced you to use pay to witness pub key hash or any of these other things that these new BIPs have more or less introduced. You don't have to use them. You can just use pay to pub key hash the entire time. You can do that. That's the option that you have in Bitcoin, is that you are master of your own node. You have self-sovereignty. Soon as you set a precedent of hard forks, that's giving somebody else power. That's saying, okay, you take care of this for me, and I will do whatever you say. And that's what every other coin has done. They hard fork all the time. They say, okay, well, if you want to stay on our network, then you're going to have to upgrade. You have to upgrade to this thing. And most people have no idea what's in there. They just sort of have to trust them, right? Like that to me is the antithesis of what decentralized money should be. Is if someone is telling you have to do X in order to stay on that network, then that's not really sound money. That's not really hard money. That's centralized money. That's fiat money. So for me, like when you talk about a block size increase, you really need to talk about, well, how are you going to do it? How are you going to make it so that it's actually voluntary and not involuntary? Now there are voluntary ways to do it, like SegWit. That was a 2 megabyte block size increase, right? Like, and a lot of people
gotten good adoption too. I think we're around 40-something% at the moment.
Yeah, and there's a market incentive to go towards that direction, but you didn't have to use it. If you had security concerns, if you had concerns about scarcity or whatever, and you wanted to stay on the previous one, and then you were free to do that. With something like block size increase, or what Bitcoin Cash is doing, they're doing like a hard fork like every 6 months and stuff. That's against the idea of self-rule, self-sovereignty. You're giving control to somebody else. You just have a dictator who's supposedly benevolent, and that's not where I think we should be going. That the entire reason why Bitcoin was created was so that it would decentralize that power. Like I said before, the problem in government and centralized entities and things like that isn't the particular person in power. It's that they have that power in the first place. And with something like a hard fork, with a centralized governance system, that's exactly what you're doing. You're giving power to somebody else. And that's a very slippery slope, guys. You don't want to go there. And I mean, the US started it as supposedly a decentralized, union of states, basically United States of America, right? Like it's supposed to be separate states, but it quickly became that the federal government was enforcing its own laws and passing its own laws soon it became sovereign over all the states. Now states don't have that much power, right? Like they don't have self-determination and so on. So that's kind of where we're going if we go in that direction of, okay, let's just hard fork whenever it's convenient. That's then you're taking away power from the people, man.
Yeah.
And you can't do that. And that's not something I'm willing to compromise in any way, shape, or form.
Yeah. No, again, I want to make it clear as well. I 100% agree with you. I didn't like the New York agreement, and I don't like the idea of a select few people deciding on a hard fork like that. I mean, and again, it's important to understand as well, people, the difference between soft and hard forks. As Jimmy was explaining earlier, if you have a hard fork, you have to upgrade to that if you want to continue to communicate over the network. But outside of that, Jimmy, I really appreciate one thing about you, and that is that you care more about maintaining the real reason Bitcoin is valuable, not just on the stored value argument. Some people argue, oh no, it should be peer-to-peer digital currency, it should be stored value, whatever. What I like is that you're not jumping the gun when it's not necessary. And in regards to scalability, I think it is going to be a concern in the future. I think we might eventually have to maybe increase block size, or we'll have to find some way of scaling, whether it's increasing the efficiency of a block, like SegWit, for example, or maybe Lightning Network. The one thing I do like about Core, though, generally like in the Bitcoin Core crowd and stuff, is that for example, things like Lightning, it is not forced upon you. There's fears of Lightning Network that people have if it's actually going to work as stated, if there's worries of centralization. Yep. But I don't have to use Lightning. I can use on-chain if I'd like. And I know over time the blocks will get more efficient, and will probably, when it gets to the point where this becomes a worldwide resembled currency or store of value, I think we're going to be at the point where we actually have real scaling solutions, either an operating Lightning Network or better blocks.
And these are things that people ask as if it's like an urgent thing. It's not urgent at all. And the thing is, if it does become a problem, then this is the fruitful ground of entrepreneurs, not something that the entire community has to solve together. This is where, if you are somebody that's looking to create a business, you solve this problem for people, there's probably a good deal of profit in it for you. That's what you should be concentrating on, and not centralized paternalistic solutions that are handed down from top down. Like that's more or less the way that Bitcoin Cash is going. It's we're going to just keep increasing the block size, and you guys are going to get it whether you want it or not. And that's the wrong approach. I think that's the approach of centralized government. That's the approach of centralized power. I'm much more anarcho-capitalistic. I think people are much smarter than government gives them credit for, and they're very creative with what will work. They can iterate. They can try different things, and the more people try it, the more anti-fragile the system becomes, because with each failure, everyone learns from those. And you create new solutions. Like say somebody goes, okay, you know what? I'm gonna make a layer 2, and I'll just be an exchange that's centralized. Well, then you get hacked. Okay, well, we're gonna do this stuff to make it better, and then it's iterative, and it gives people a chance to innovate instead of having top-down innovation. And Lightning Network, to a large degree, is like that, right? It was something that somebody came up with. Now there are like at least 3 different companies like using the Bolt standard and everything else to try to make money, like making it so that people can have micropayment transactions all over the place. So, that market process, we're so conditioned towards, somebody telling us what to do and then just doing it, or feeling like we get a say in how the network's going to evolve. But vast majority of market processes don't work like that. It's an entrepreneur, an innovator, someone with skin in the game that actually does stuff. You don't get a say unless you're actually going to, solve the problem, right? Like you're like, people think they have the right to like go and tell a bunch of entrepreneurs what to do. That's not how the market works, guys. And that's not how it should work. The entrepreneur has skin in the game. They get to do what they want. If you want to do something else, or if you want another option, go and make it. Don't blame other people that you don't have a particular option. They don't owe you anything, okay? You have to go and make it yourself. And this idea that like you know, and that's a way for us to get like dulled to or more complacent about what's going on, because oftentimes you're given a vote, and that's a way to make you feel like you're actually in control when you're actually not. Vast majority of the decisions in government are made by bureaucrats without passing any law or anything, without any accountability to the people. Um, that's kind of how it's been, and that's the model that a lot of these cryptocurrencies and governance boards and things like that are trying to do. They're giving you a vote to make you feel like you actually have a say when you actually don't. And I despise that. I think entrepreneurs should get to decide. People with skin in the game should decide, and they'll look for solutions. There's profit in it for everybody if you can solve problems for people. So there's this whole like scaling roadmap stuff. Like, what are we gonna do in 30 years when there's like 7 billion people on it? It's ridiculous.
What are we gonna do when the block reward goes away? What are we? No one's gonna use Bitcoin.
Yeah. Like those are like you don't need to solve that, okay? And you don't need to be the one to do that. There are market forces that are very good at taking advantage of this stuff and figuring out a good way to solve problems for people. If it's about security of the blockchain, there are ways around it. People are very creative, and this is what people bring to the world is creativity, innovation, entrepreneurship. That's what they should be bringing into the world instead of rent seeking. And like it just pisses me off that so many people are trying to solve things from a centralized, like paternalistic way, when really this is the realm of businesses and entrepreneurs and innovators. And they come up with some brilliant stuff, and other people say, well, that can't work, and then they go and do it, and it's like, oh, that worked, right? Like that's what drives it. That's what's beautiful about it. And it's crazy that we want some centralized sovereign to tell us what to do, or some centralized sovereign whose vote that we get to cast upon, right? Like, oh, okay, well, I vote for this kind of system and I vote for this kind of system to give us the illusion of control. What we really need are choices created by the market, where the market gets to decide with their dollars.
There you go. I like it. Speaking with money. Well, Jim, I really appreciate the perspective here, Jimmy. I think we've talked about a lot of interesting things, talking about centralization versus decentralization, some of the mistakes we should avoid, and evaluating more fundamental things such as network security and scarcity. I'm 100% on with you on that. As much as I like to explore into altcoins and see alternatives, but I want to give you some time real quick, because I know it is something that you've been working on for some time, to talk a little bit about your developer course, because for me that excites me. I'll be honest. I don't think I'll ever step foot behind any language again. I've tried it. I've tried to develop things in the past in a variety of different languages, even basic languages like JavaScript, but I pretty much got stuck out in coding and like SQL and a few things. But anyways, would love to just kind of give you a little bit of time just to talk about your program and stuff, because it does interest me.
Yeah, it's programmingblockchain.com. You can go and check it out. But I've taught over 300. I think it's over 400 now. Over 400 people in Bitcoin. Like from the Bear protocol. Like just teaching them everything about it and how it works. And it's a very intensive 2-day course. It's probably about a semester's worth of information in 2 days. And a lot of people are like, can you really learn that much in 2 days? Yes, you can. It's because the university system is completely broken that you need a whole semester to learn it. But yeah, I teach you all that stuff, and I go through. I make you do a lot of exercises in order to like solidify that learning. But yeah, it's a 2-day course. The next one is in Prague, October 8th and 9th. It's very intense for a lot of people. Not a single person that's ever taken the course has said it's too easy. But at the same time, if you learn enough Python and can do a few problems on projecteuler.net, you're fully qualified to participate. I'll teach you everything that you need to know. So yeah, it's a fun time. A lot of my students end up bonding quite a bit, and I have an alumni forums and everything else. So yeah, check it out.
Cool. Jimmy, I completely agree with you. I'll tell you a little thing about myself. I actually dropped out of university myself, and lo and behold, that's what led me to working in Silicon Valley and then inevitably creating my channel. So yeah, I know, I think more than anything, we're going to see restructuring in education as well. And I'm glad to see that you're offering something like that. A lot of these smaller courses that are more skill based, and we need more people in the space actually developing for cryptocurrencies and actually trying to understand some of these upgrades that we can make to fix those problems that we're all panicking about. So yeah. Well, anyways, Jimmy, thank you for taking the time. It was a great conversation and everything. Hope to keep in contact with you and hopefully have you back on in the future. But thanks again for just making the time to talk.
Yeah, no problem. Thanks for having me.
And that's going to be it for the third episode of the DashCast. Thanks so much everyone for tuning into this episode, and if you liked it, please consider giving a thumbs up down below and possibly share it with some family and friends. Also, if you have an idea for who should come on to the next episode, please leave it down in the comments down below. Your feedback is always appreciated. Once again, I want to give a big shout out again to Jimmy Song for coming onto the podcast. Really appreciated having him on, and hopefully he can come on in a future episode. And again, I want to give a big shout out to our sponsor for this episode, Energy. Energy is a self-funding cryptocurrency that's goal is to introduce and bring cryptocurrency to the masses. Energy intends to do this by significantly improving upon the self-funded governance concepts founded in projects like Dash and Smart Cash. Again, Energy is already working and live with no ICO and no pre-mine, and has a strong decentralized treasury system with masternodes voting where to direct these funds. This allows Energy to pay developers and contributors, and as Energy grows, the treasury budget will grow, leading to a positive feedback loop. Energy is currently conducting an earn drop campaign with rewarding users with up to 100 Energy coins for joining their community. For more information, again, check the link out in the description. That being said, I hope you all enjoyed this episode of the DashCast, and I'll see you all in the next one.